Welcome to Portfolio Casts, the podcast where we break down real investor portfolios using publicly available data.
In this episode, we're analyzing Pat Dorsey from Dorsey Asset Management, based on their latest reported 13F filing, exploring the key holdings, portfolio concentration, and what the positioning might tell us about their thinking.
Looking at the latest filings from Dorsey Asset Management, it is clear that Pat Dorsey is sticking to his moat philosophy. The portfolio is currently valued at $1.2 billion. That is a massive amount of capital focused on just a handful of high-conviction names. Mike, the overall gain is sitting at 11.9%. But today was a standout. The portfolio jumped nearly 9.5% in a single day.
It is an incredible move, Sarah. Pat Dorsey literally wrote the book on economic moats. He looks for businesses that can fend off competitors for decades. When you look at his top 3 holdings, they represent over 44% of the entire portfolio. We are talking about massive concentrations in Danaher, ASML, and AerCap. These are not just stocks to him. They are fortress businesses.
Let's start with the largest position, Danaher Corporation. It makes up 15.3% of the total portfolio. The current price is $240.08. I noticed he actually reduced this position by about 7% recently. Does that signal a change in his thesis?
I don't think so. This is likely just disciplined rebalancing. Even after the trim, he still holds over 860,000 shares. That position is worth over $206 million. Danaher is the ultimate quality play. They have the Danaher business system which constantly improves efficiency. The price-to-earnings ratio is a bit high at 47.9. However, Dorsey has an overall gain of 21% on this position. He is playing with house money at this point.
The stock did dip slightly today, down 0.8%. But it has been outperforming its competitors lately. The 52-week range is wide, from $171 to $258. It is trading near the top of that range. Mike, what do you make of that 0.5% dividend yield?
It is small, but it is consistent. Danaher isn't a dividend play. It is a compounding machine. They acquire smaller life sciences companies and make them better. The earnings per share of $4.86 shows they are still very profitable. Dorsey likes that durability. It is a core holding that provides stability to the billion-dollar fund.
Now, let's talk about the big move in ASML holding. This is 15.1% of the portfolio. Dorsey didn't trim here. He actually added over 23% to the position recently. That is a huge show of confidence.
That is the standout move for me. ASML is the only company in the world that makes the extreme ultraviolet lithography machines needed for advanced chips. Talk about a moat. The stock is currently trading at $1,395. That is well above its previous 52-week high of $1,183. He is buying the breakout.
He now owns over 173,000 shares. The total value is over $241 million. The gain on this position is staggering at 44%. Why add more when it is already at all-time highs?
Because he believes the moat is widening. The recent news shows ASML is outperforming the broader market. The price-to-earnings ratio is 41.9. That is expensive for most, but not for a monopoly. The earnings per share is over $26. When you have a 23% increase in position size at these prices, you are betting on a semiconductor decade.
It is a bold play. The daily change was up over 2.5% today. It seems the market is agreeing with him. Now, the third pillar of this portfolio is AerCap Holdings. This is 13.8% of the total. It is a bit different from the tech and life sciences plays. What is the story there?
AerCap is the world's largest aircraft lessor. They own the planes that airlines fly. It is a very capital-intensive business. Dorsey trimmed this one by about 7%, similar to Danaher. The current price is $143.97. He holds about 1.2 million shares worth over $181 million.
The valuation here looks completely different. The price-to-earnings ratio is only 6.7. Compared to the 40-plus PEs of ASML and Danaher, this looks like a deep value play.
It absolutely is. AerCap has massive pricing power right now because there's a shortage of new airplanes. Their earnings per share is $21.11. The stock was recently upgraded to a buy by several analysts. Dorsey is sitting on a 19% gain here. Even though he trimmed it, it remains a massive core position. He is capturing that recovery in global travel.
It is interesting to see the mix. You have high growth tech in ASML. You have steady life sciences in Danaher. Then you have this cyclical value play in AirCap. All three have those durable competitive advantages he looks for. The 52-week range for AirCap is $85 to $149. It is also trading near its highs.
Dorsey is clearly not afraid of buying things that are working. He isn't bottom fishing. He is looking for winners that can keep winning. The portfolio's daily gain of 9.4% is proof that his wide moat strategy can deliver explosive results. Seeing him add so aggressively to ASML while trimming the others tells me where his highest conviction lies right now. He is betting on the infrastructure of the future.
Now, Mike, let's dive into the heavy hitters in this portfolio. I want to start with a name everyone knows. Alphabet Inc.
Alphabet is a fascinating case here. It currently makes up 9.4% of the total portfolio. That is about $142 million. But the big news is the recent activity. Dorsey reduced this position by over 35%.
35%? That sounds like a massive shift in conviction.
It is a significant trim. The stock is trading around $330.84. It is actually sitting near the top of its 52-week range. That range goes from $140 up to $340. He might be taking profits while the price is high.
The valuation still looks somewhat reasonable though. A price-to-earnings ratio of 31.6.
For a tech giant, that is not outrageous, especially with an earnings per share of $10. There is also a small dividend yield of 0.26%. Dorsey is likely watching the news about Amazon and Microsoft. They are self-funding power grids for AI. He might be questioning if Alphabet's spending will stay competitive.
Let's move to another tech giant. Meta Platforms Inc. This is actually a larger slice of the pie.
You are right. Meta is a core holding at 12.7% of the total. That is roughly $124 million. Even though he reduced the position by 21% recently, it remains a top bet.
The stock had a great day today. It was up over 5.5%.
It did. The current price is $647.63. However, the portfolio shows an overall loss of nearly 12% on this position. That is a tough pill to swallow.
Why do you think he is staying so heavy in Meta?
The fundamentals are still impressive. Look at the earnings per share of $22.60. The price-to-earnings ratio is only 26.4. That is actually lower than Alphabet. It suggests Meta might have more room to run, especially since the 52-week high is nearly $800.
Switching gears to something more industrial. AutoZone Inc. This stock price is eye-popping.
It really is. $3,698.63 per share. It makes up 11.5% of the portfolio. Dorsey trimmed it by about 16% recently.
That is a $110 million position. What do you see in the data there?
The returns on capital are the story here. AutoZone is a cash flow machine. The earnings per share is a massive $143. Even with the recent trim, it is a massive vote of confidence in their business model.
It is currently down about 13% overall for him. Is that a concern?
It might be. The stock is trading in the middle of its 52-week range. The low was $3,200. He is likely holding because of that durable competitive advantage he loves.
Now let's talk about a new move. Royalty Pharma plc. He actually bought into this one recently.
This is a strategic play. It is 7.5% of the portfolio now. The value is about $94 million. It is a different kind of business. They buy royalty interests in marketed drugs.
And it pays a decent dividend?
Exactly. 2.37% yield. The price-to-earnings ratio is 29.5. It is currently trading at $40.11. It is very close to its 52-week high of $41.
It seems like a defensive move. Let's look at Booking Holdings Inc. Another high-priced stock.
$5,150 per share. It is 8.2% of the portfolio. He trimmed this one slightly, about 7%.
The travel sector has been volatile. Is that reflected in the numbers?
A bit. He is down about 4.6% overall. But the earnings per share is $153. That is incredible. The bulls are still very optimistic about their market position.
Finally, we have ENOV Corporation. This one looks a bit painful.
It is. It's 6.5% of the portfolio. The overall loss is over 22%. The stock is trading at $23.55. That is right at the bottom of its 52-week range.
He reduced it by 6%. Is he losing patience?
Possibly. It is a $56 million position. They recently presented at the J.P. Morgan Healthcare Conference. Investors are clearly waiting for a turnaround.
So, looking at the whole picture, $1.2 billion under management. An overall gain of nearly 12%. What is your final take on Dorsey's strategy?
He is sticking to his moat philosophy. He is trimming the winners like Alphabet to manage risk. He is holding through the dips in Meta and AutoZone. He is not afraid of high-priced stocks if the earnings are there.
It is a high-conviction, concentrated approach. Not for the faint of heart.
Not at all. But with a 9% gain today alone, the strategy is showing its teeth. He trusts the quality of the businesses to win over the long term.
That is a great place to wrap up our analysis of Dorsey Asset Management. I'm Sarah.
And I am Mike.
Thank you for listening to our deep dive into the world of moat investing. We hope these insights help you navigate your own portfolio. Have a great day. Thanks for listening to Portfolio Casts.
This content is for educational purposes only and should not be considered financial or investment advice.
Any figures, prices, or portfolio values discussed are approximate, based on public filings, and used for illustrative purposes only.
The views expressed are interpretations of public information and may not reflect the investor's current positions.
Follow Portfolio Casts for more investor portfolio breakdowns.